I mean, the easiest answer is wait. The second easiest answer is if you have accumulated any other savings in the meantime and have a little bit of wiggle room on your budget, then maybe you just bite the bullet and move, buy what is actually going to suit your needs.
And the interest rate is such an important factor in most people's minds as well. It's not necessarily just the payment, but it's like, oh, what's my rate as well?
Yeah.
And I get it. The higher the rate, the less of your payment is going toward principal compared to interest and all of that. But it is still a monthly expense at the end of the day, and can you afford it, right?
Yeah.
But yeah, I mean, as far as your question, it really just varies. I mean, we're in a unique situation now because of everything that took place during COVID and all the money that was being printed and the relief packages and everything, and we're dealing with the aftermath of all that now. So it's kind of hard to gauge historically, like how long this might last. That you're seeing?
Yeah.
Yeah.
So I am seeing that people that have bought in the last, let's call it 1 to 2 years, that were hoping that they could upscale pretty quickly, are realizing that there may not be as much upside as there was from 5 years ago to 3 years ago.
Yeah.
Everything spiked by like 30%.
Yeah.
It's just flattened. It's gotten to a more normalized level, but you couldn't necessarily bank on your money going up by 30% in the last 2 years.
Yeah. Well, yeah, let's go. Yeah, we'll continue that then real quick here. I would say, yes, people were spoiled through COVID or during COVID, and everything spiked a ton. But in the last 2-3 years, like you were saying, it's kind of leveled out.
Yeah.
Right. There hasn't been like a whole lot. I mean, there's been some little dips and whatnot in the market, and with interest rates too. But more or less, we've been hovering in this, call it 6.5% to 7.5% interest rate range. And then, consequently, home values are pretty similar to what they were 2 or 3 years ago. They've gone up a little bit.
Definitely.
But nothing significant, right?
Yeah, probably a few percent depending on what you've done to the property, if anything.
Yeah.
But I like to think about the cost of what would have happened if you didn't buy, because you would have just kissed away like 24 months worth of rent that at least you're holding it in your house when you own the property.
Yeah.
Yeah.
Yeah. Yeah. So I guess the biggest challenge for those folks is they were hoping that they could move up.
Yeah.
And it's just not going to be as quickly as they were expecting, right?
Yeah.
Yeah.
So I guess it's figuring out an answer to that dilemma. I mean, the easiest answer is wait. The second easiest answer is if you have accumulated any other savings in the meantime and have a little bit of wiggle room on your budget, then maybe you just bite the bullet and move, buy what is actually going to suit your needs.
Right. Yeah, I mean, that's something. If people are making more money than they were a couple years ago, then that can definitely help because now they have an increased budget.
Yeah.
So even though maybe they were hoping to make more off of their home that they bought a few years ago, it might still be enough to where they could still move up and qualify for the payment. It's just maybe not the most ideal situation, but it's never going to be perfect anyway, right?
Well, and on the flip side, at least the buyer or the seller now would have more opportunity to negotiate right now, because a lot of the properties are being a little bit more like loose on their pricing. They're typically realizing that to attract a buyer in the current market, they might have to give a little bit to incentivize the buyer, or they might have to be creative about offering a buy down, something to incentivize them on the rates. I mean, if you bought 2 years ago, there's a good chance if you haven't refinanced that you're probably at close to 8%, right?
If they bought at the peak a couple years ago, yeah, they were for sure in the sevens.
So if you could potentially have a little bit more leverage now because you've got some equity working for you, you've got less buyers to compete with, so the sellers are a little bit more motivated, then maybe they can help you to buy down the rate so that you're at least a lower rate than you were before.
Yeah. No, that's a good point. Yeah. And I am seeing on the, obviously I'm representing buyers for doing their loans, but I am seeing them being able to negotiate a bit more with the seller.
Yeah.
And the seller not just thinking that they have, they're in complete control of the whole situation and they hold all the cards, right?
Yeah.
Inventory is starting to go up a little bit too.
Yeah. So
But
is days on market.
yeah,
Yeah.
and so is days on market. I have a past client who's trying to sell her home. It's been on the market for 10 weeks now. That's obviously not just because of the market. They probably had it overpriced or whatever. But the point is like, it's not, the days on market's going up, and there are a little bit more
Yeah.
options for buyers to potentially negotiate. So as opposed to a couple years ago where you just had to take whatever you could get, right?
Yes. I think another thing that I am seeing more of is I am seeing sellers that are trying to wrap their heads around a market that is not as predictable as it used to be. Because until, like, let's face it, probably about last August, the market was very predictable.
Yeah.
Things would go on the market and they would sell very quickly as long as they were priced well. And even if it wasn't priced well, it probably sold pretty quickly.
Yeah.
Then there was a little bit of a slowdown, and then there was a little bit of a pickup at the beginning of the year. And then there was, again, a little bit of a slowdown that people don't expect in the spring. So it's hard to, like, normalize and accept the fact that the market is doing things that are a real challenge to what we all, like, know and hold dear as, like, the truth. It's just changing.
It is, yeah. And it's important to get ahead of that.
Yeah.
And see what's coming up, because that'll just be to the buyer's advantage, right? So that they can, because like, to your point, I mean, most sellers would have just laughed at any sort of request
Yes.
from a buyer a couple of years ago, right?
Yes.
And now, I mean, I'm seeing
concessions.
I'm seeing concessions. I'm seeing them for buying down the rate or doing the 2-1 buy down or covering the closing costs.
Yeah.
Reducing the purchase price. There's all sorts of ones that are coming up. And not to say it's all shifting immediately that direction, but it is going that direction.
Yeah.
And that's definitely going to, I think, work in buyers' favors, especially if they did buy a couple years ago.
Yeah.
That's a big advantage, I think.
Another thing that I am seeing is there are still a lot of flippers out there, and they are realizing that if they do a home nice, new, pretty, that's what the buyers are still most attracted to. They're going to get the most interest. They may not make as much as they wanted to, but they're still going to do quite well if they got a good deal on the property. And I'm seeing a lot of buyers that are upset about this because, yes, the buyers want the nice new stuff too, but when they realize how much it's pulling the prices up, it's making it hard for them to be able to, like, land anything. So I think a lot of buyers out there are starting to realize that they might have to sacrifice on condition to get a house in a price point they can afford.
Yeah. Yeah. I mean, yes, your money can go a lot longer, a much longer way if you're willing to buy something that's not fully remodeled.
Yeah.
Because I mean, that's how my wife and I got our home.
Yeah.
Because that was during COVID when, I mean, the issue there was 50, 60 offers on every property that's totally remodeled.
Crazy.
Or more, right? And it was going for so much more. And it's not like the house that we bought was bad. It was very much livable, but it was a rental prior to us buying it.
Yeah.
So, it needed a little bit of work, and we were able to get it because including our offer, there was only 5 offers on the property.
Did you wonder what was wrong with it?
I know. And I was like looking at it, I was like, well, I mean, we still had to offer a little above asking, but it was a lot better than the other ones we were losing out on that were like 150,000 over asking and 50 offers. And I know that's a different market, obviously, than what we're seeing now. But the point still remains that most people, when they see the fully remodeled house, it just, it elicits that emotional response of, wow, this is so great.
Yeah.
We don't have to do anything. We can just move right in. But it's also going to attract 10 other people wanting the same thing.
I was just having a conversation with another agent yesterday, and we were talking about why when there are less people out there looking, everybody kind of like cools off. They're like, oh, I'm not really in, they just kind of follow the herd, right? So they're like, oh, it's a bad time to buy. It's a bad time to buy. Why would I look now? But as soon as everybody jumps in, because whether it's the interest rates or the prices or it's just the buzz on TV, then all of a sudden that's when it's craziness. That's when it's impossible. That's when you are potentially up against 50 offers, and then you're kicking yourself, oh, if only I had, done it back when. So it'll be very interesting. I mean, I know you don't have a crystal ball, but with the interest rates potentially coming down at some point in the future, it'll be very interesting to see at what point does it start to tip where all the buyers start to be like, this is a good time to buy? But is it really good? Because now now you have all the competition.
Yeah, I've thought about that too. And we
Mhm.
have one piece that's moving that direction, and that's inventory.
Mhm.
So you're right. We don't know what rates are going to do. I don't think that they're just going to drastically drop overnight.
Mm.
I mean, unless there's something that happens
We don't need
economically or
we don't
geopolitically,
know
we don't necessarily need that. But like,
no.
we just don't know. Like something drastic would have to happen to trigger that.
Yeah.
But I do feel like because we've been in this 6 to 7 to 8% range for so long, if your average rate all of a sudden dropped to like the mid fives or even the high fives, and there's more inventory, we would all be a lot more busy, and there would be a lot more buyers
I
coming
think
out.
so
Yeah.
for sure. In your experience or like looking at the charts and graphs over time, how long do like the high cycles for interest rates like on average last? Do you have any idea?
Like what we're dealing with right now, you mean?
Yeah, and I know that this is not high compared to like the 80s, but
Yeah, well, yeah, it's nothing compared to, I
I
mean,
can't believe my parents had like an 18% rate,
yeah.
but
Well, the flip side of that though is home affordability
yeah.
now is actually worse than it was then, even though rates are lower,
Well, yeah, my
just because
parents
the home prices are so high.
they paid like
That's
60,000.
what I mean. Yeah. So it's
But
like,
it still was a stretch for them.
but it still is a stretch for sure.
Yeah.
Yeah, because I mean, you see that rate, it's and the interest rate is such an important factor in most people's minds as well. It's not necessarily just the payment, but it's like, oh, what's my rate as well?
Yeah.
And I get it. The higher the rate, the less of your payment is going toward
Hmm.
principal compared to interest and all of that. But it is still a monthly expense at the end of the day, and can you afford it, right?
Yeah.
But yeah, I mean, as far as your question, it really just varies. I mean, we're in a unique situation now because of everything that took place during COVID and all the money that was being printed and
Yeah.
the relief packages and everything, and we're dealing with the aftermath of all that now. So it's kind of hard to gauge
Mm.
historically like how long this might last, but um, all the experts, like even Fannie Mae and all that, they're predicting that rates will be in the low sixes by the end of this year,
Hmm. That's better.
which is definitely better. I mean, if we were at 6 to 6.25 on your average 30-year fixed, as opposed to, I think the average rate right now is like 6.875 or something.
Yeah.
That would really help a lot of people. Anything lower than that, of course, we're going to get even busier. But I'm hopeful that after this year, we'll have a year under our belt with the new administration. Everyone kind of sees what's going on, what they're trying to do and accomplish, and all of that, regardless of what side you lean politically or anything like that. I think we'll have a better gauge of what direction rates are going to go, hopefully next year. But
Well,
this year is definitely kind of shaping up to be something similar, I think, to last year.
yes.
Yeah.
I do think though, like as far as what we do and how we help people, everybody needs a place to live, whether they're renting or whether they own. And everybody has to deal with that cost because if you're renting, you are paying someone else's mortgage or whatever they're carrying.
Yeah.
So the prices get distributed one way or the other.
Right.
Hmm.
Yeah. Yeah. I always try to tell people, and again, I know it's hard to wrap your head around, but at the end of the day, what's the payment? Is that reasonable for you? Can you afford it? And then kind of work around that
Yeah.
figure, right? And then we take a look at, okay, well, this is the interest rate that it's going to be to get you to that payment. This is the purchase price. This is the down payment. And if all of that makes sense and you're in the market to buy, then it is a good time for that person to buy
Yeah.
because they can afford it. But if they can't, then no, it's not a good time for them to buy because they can't afford it, right?
A random question for you. You may not know the answer, so you can cut it if you don't. But I mean, I think we've all read that if you throw a little bit of extra money towards your principal, like that will help you to get the loan done sooner and everything. Have you ever gone through and like looked at, hey, if you just like, didn't buy lunch out 3 times a week and like had an extra $100 a month to throw at the principal, like nothing crazy. Obviously, the more the better. But if you did that, would that help you tremendously?
Yeah. I mean, depending on the loan amount and rate and all of that, you throw an extra $100 a month to the principal. That's $1,200 a year over a 30-year loan. So that's $36,000 in additional principal. but it's lowering it, each month as it's doing that. I think it's like a few years that it's knocking off.
That's great.
Yeah. And I know nobody's going to do that for 30 years because they're probably going to refinance or move or something.
Yeah.
But yes, it does help a lot to do that.
But that would also like benefit you in terms of your payoff when you go to sell too.
Absolutely. Yeah.
So
Yeah.
I think a lot of people don't wrap their heads around that part of it, because your payoff ultimately is going to be whatever's still due. But if you're knocking down the principal, you'll owe less.
Yeah. And I think a lot of people don't think about it too much now because the payment is already so high that they're like, well, I can't really or don't want to do more than the minimum anyway.
Yeah.
Right. I mean, there's not that many 15-year loans going on right now because it would just be a sky high payment. But I mean, if somebody does have the means to do that and they have enough disposable income, it definitely makes a lot of sense to do that. Yeah.
Well, all you families that have like preschoolers that you're paying for preschool for, once your kids go off to elementary school, frees up a little bit of money.
Yeah, that's not cheap.
We're very much looking forward to our experience at preschool one day.
Yeah.
So we're like, oh, look at the difference in like childcare costs.
Childcare costs is a lot.
It's a lot.
Yeah.
It's necessary.
It's necessary, but it's a lot.
Going from like preschool to like part-time after school care is, oh my gosh, it's gonna be so exciting.
Yeah.
And we'll be spending it in other areas like sports, I'm sure, but still, it's a huge difference.
Yeah. Yeah. I mean, if that's it, all else being equal, if that is being eliminated for somebody, absolutely throw it towards your debt if you can.
Yeah. Or like all of the parents that have kids going off to college too. Sure, you have other expenses, but you may not have those day-to-day expenses as much, that you might have extra money. And at that point, you might even be pretty close to having your house paid off anyway.
Right.
So,
yeah.
All right. Well,
cool.
Thank you.
Yeah. Well, thanks for joining us at our new studio, Holly.
Love it.
I know you'll be back for more. But yeah, happy to have you here.
Thank you.
Yeah, thanks.